Good morning, welcome back to the Genius Multi channel. Let's take a quick run through today's headlines, take a look at what's happening, what's developing, where things are at. Unscripted, extemporaneous as usual, and most likely somewhat boring. Thanks for being here. We've got silver up 40 cents, 2.39%. Last time I checked, it's 17.16. We got gold 12.14.50, up $18.30, 1.53%. Copper down a little bit, and platinum up 70 cents, 97.10. Palladium 754.95. Looks like Trump's comments on the strength of the dollar prop up gold. Sounds like he said something about the dollar being too strong. Gold jumped more than 1% to its highest in nearly 8 weeks on Tuesday after President-elect Donald Trump said the dollar was too strong, sending the greenback lower. Spot gold rose 0.7% to $12.17.11 per ounce after touching a November 22nd high of $12.1864. U.S. gold futures were up 1.3% at $12.1070 per ounce. The dollar in which gold is priced fell 0.5% to a 6-week low against major currencies. Gold rises to an 8-week high as traders focus on Trump and the BREXIT. We'll talk about the BREXIT here coming up. Gold prices on Monday touched their highest level in about 8 weeks as analysts said the safety play was helped by fresh worries about both President-elect Donald Trump and BREXIT. Gold for February delivery was up 1.47%. Central bank bashing has gold only asset safe from meddling. This year is a turning point for critique-free age. Gold could benefit in high inflation, low interest rate world. Barring asset management's Christopher Mahone has one major conviction about 2017. It will be the year in which central bank bashing by politicians becomes the new normal. So he's seeking shelter in gold. This year is the turning point, Mahone said in an interview on Monday. For 7 years or so, central banks have largely escaped critique, even though one could argue that their policies have been pretty inadequate in many senses. It's very plausible now that politicians stand up and throw stones at central bankers. Gold used to be the center of the global financial system. For that reason, it has a reputation as a currency, but as a currency that's not issued by governments and not controlled by governments, Turner said. That's my favorite quote from that entire article. Demonetization may affect demand in short term, says the World Gold Council. New Delhi, India's demonetization decision is likely to affect gold demand in the short term, the World Gold Council Outlook report released on Friday stated. In India, the government's decision to remove large denomination rupee notes took around 86% of India's circulating cash out of its economy, according to the Outlook 2017 Global Economic Trends and their impact on gold released by the World Gold Council. While the purpose is to replace them with newly printed notes, we believe that the liquidity squeeze could have a temporary negative effect on economic growth and may also affect gold demand in the short term. Britain will leave the EU single market as May sets aim for hard Brexit. Britain will quit the European Union's single market when it exits the bloc, Prime Minister Theresa May said on Tuesday. In a decisive speech that quashed speculation, she would seek a compromise deal to stay inside the world's biggest trading bloc. We've touched on the Brexit situation ever since the news finally broke regarding the vote in England for the Brexit to occur, and ever since that time, the topic has been harshly debated in the media and throughout the world. And it continues to be our stance here to support the Brexit and the decision to leave the European Union that the people of England rightly made. Permabear Edwards, waste of time to save Italian banks. What in the world was going to happen in Italy this year? Italy is in the midst of a serious banking crisis, but the government is wasting both time and money trying to save the country's struggling lenders, says Societe Generale strategist Albert Edwards. After years of slow growth in the Eurozone's third largest economy, the SocGen Permabear argues that banks will continue to suffer until more drastic measures are taken. That's because the sector's mountains of bad loans are only a symptom, not the cause of Italy's problems. Italy is totally moribund. Yet, what we see at the moment is great efforts to help Italian bank bailouts. But the Italian banks are not the problem with Italy, Edwards said at a conference in London on Tuesday. Italy never had a boom and bust. At least Ireland, Spain, Portugal, they had a big credit party before they bust, Edwards said. Italy didn't have the party, just had the bust. At least France is crawling its way higher here, but Italy is right at the bottom. Italy has not grown basically since it joined the euro in 1999. Italy, in my view, will never grow within the euro. It's as simple as that. Moving over to the east, we see China post the worst export fall since 2009 as fears of U.S. trade war loom. China's massive export engine sputtered for the second year in a row in 2016, with shipments falling in the face of persistently weak global demand and officials voicing fears of a trade war with the United States that is clouding the outlook for 2017. In 1 week, China's leaders will see if President-elect Donald Trump makes good on a campaign pledge to brand Beijing a currency manipulator on his first day in office, and starts to follow up on a threat to slap high tariffs on Chinese goods. The world's largest trading nation posted gloomy data on Friday, with 2016 exports falling 7.7% and imports down 5.5%. The export drop was the second annual decline in a row and the worst since the depths of the global crisis in 2009. The trend of anti-globalization is becoming increasingly evident, and China is the biggest victim of this trend, customs spokesman Huang Songping told reporters. These are the biggest tail risks for markets right now, says Money Managers. Here we'll take a look at several charts and polling data for major money managers and see what they believe the risks are. And you'll see they talk about trade war, protectionism, U.S. policy error, China, the currency devaluation and property bubble. You can also see some runner-ups there. We've got the EU disintegration, banks default, stagflation crash in the bond market, the BREXIT and the pound sterling crisis, tapering of quantitative easing by the European Central Bank, and then there's, of course, others, miscellaneous fears, alien invasions, zombie apocalypse. I'm sure those fall into that category. There are 3 specific risks that investors and money managers are or should be worried about, according to the January survey. Well, we're mere days away from the inauguration of a new president here in the United States, and we'll see what excitement that brings to the markets, what changes in trade and monetary policies. Let's hope for the best, keep our eyes on the prize, keep stacking, and as always, I appreciate all of you here being part of this channel and checking in, keeping tabs on what's going on and what the most recent discussions might be here on the Junius Malpe channel. Have a good day, and thank you all for your support.